Assalamu alaikum. This is Muhammad Jasimuddin, Assistant Professor, Department of Accounting, Wali Nevaz Khan College, Kishoreganj. In class BBA Professional 7th semester 2020, topic course name Management Accounting. Today's lesson will cover how to calculate cost of goods sold and how to prepare an income statement in the manufacturing firm. Last class we discussed about element wise classification of cost. That class we discussed types of element in the types of element of production, material, labor and overhead. We already discussed all the direct expenses togetherly is called prime cost. So, that is prime cost includes all the direct expenses, direct material, direct labor and direct other expenses, and all the other expense, all the indirect expenses included in the overhead expenses. Overhead expenses include indirect material, indirect labor and indirect other expenses. Overhead are three types. Number one, manufacturing overhead or manufacturing expenses, administrative overhead or administrative expenses, selling, distribution and customer services expenses. Only manufacturing overhead included in the production cost, but administrative expenses and selling, distribution and customer services expenses are not included in the production cost. So, last class we discussed how to calculate production cost and or cost of goods manufactured. We saw that lesson. Only manufacturing expenses added with prime cost, then we get total manufacturing cost and beginning inventory of work in process added with that cost and less ending inventory of manufacturing expenses, then we get cost of goods manufactured or production cost. Today we will discuss about how to calculate cost of goods sold and how to prepare income statement in the manufacturing firm. In a manufacturing firm, three types of inventory. A manufacturing firm has three types of inventory. Number one, material. Number two, work in process. Number three, finished goods. When material expense is treated as inventory, those material, unused material not used in the financial period or not proceed or not into a production process, that is called inventory of material. Inventory of material on hand at beginning the period is called beginning inventory of material, and inventory on hand at the end of the accounting period is called ending inventory of material. So, we can say that inventory of material are two types: beginning inventory of material beginning inventory of material, and second one is the ending inventory of material. Ending inventory of material. Second one, work in process. What is work in process? Already we discussed about what is work in process in the last class. Work in process, that is unfinished goods or unfinished product. It is called work in process. Process but unfinished, not finished, is called work in process. Work in process are two types: beginning inventory of work in process, work in process. When work in process on hand at the beginning the accounting period is called beginning inventory of work in process, and work in process on hand at the end of the accounting period is called ending work in process, ending inventory of work in process. Number 3, finished goods. Finished goods is the goods which are finished or ready to sell is called finished goods. It is ready to sell. Finished goods are inventory are two types. When we called finished goods inventory, finished goods finished but unsold, not sold, that is called finished goods. Finished goods inventory are two types: beginning inventory of finished goods, beginning inventory of finished goods, and ending inventory of finished goods. Inventory of finished goods. Finished goods on hand at the beginning the accounting period is called beginning inventory of finished goods, and finished goods on hand at the end of the accounting period is called ending inventory of finished goods. So, we can say that we are already understand about inventory of material, both types of inventory of material, beginning and ending, and inventory of work in process, both beginning and ending, and finished goods inventory, both beginning and ending. At first, we need to know about inventory, all types of inventory before preparation of cost of goods sold statement and statement of income statement. So, we discussed of this matter. Now, we start to prepare statement of cost of goods sold. How to calculate cost of goods sold? In the last class, we saw that how to calculate cost of goods manufactured. So, we taken from last class cost of goods manufactured figure, we can say that cost of goods manufactured, cost of goods manufactured cost of goods manufactured particulars amount we will discuss about how to prepare a statement of cost of goods sold. With example, statement of cost of goods sold. Statement of cost of goods sold, cost of goods manufactured, statement of goods manufactured taken from last class. Say for example, 1 lakh at beginning inventory of finished goods say for example 20,000. That is the unsold product at the previous year or last year. This product not proceed in the current year. This product proceed at the last year. These are carry forward from last year. 20,000 added with cost of goods manufactured 1 lakh, then we get 1,20,000, that is called cost of goods available for sale, that is ready for sale, less ending inventory. These are basic concepts. We should know all the basic concept for the study about the management accounting or ending inventory of finished goods. Say for example 15,000 to 1,05,000 cost of goods sold. Cost of goods sold. Then we will prepare how to prepare income statement. 1,05,000 is the cost of goods sold. Before preparation of income statement, we should know commercial expense. What is commercial expense? Commercial expense. Commercial expense included two types of expenses, office and administrative expense. Say for example, 10,000 and selling and distribution expense 5,000, 15,000, that is the commercial expenses. We know that three types of overhead. One is the manufacturing overhead, second one is the office and administrative overhead, and third one is the selling and distribution overhead or expenses. Manufacturing overhead included in the production cost or cost of goods manufactured, but other two types of overhead expenses, that is the office and administrative expenses and selling and distribution expenses, both are not included in the production cost. That is the period cost. That period cost included in the preparation of income statement. Office and administrative expense and selling and distribution expenses, so both are included in the commercial expenses. So, we already understand that expenses, commercial expenses. Now, we try to prepare income statement. Income statement. Particulars. Amount, say for example, sales in the current year, sales 2 lakh less cost of goods sold, cost of goods sold 1,05,000, 95,000, gross margin, that is called gross margin, that is called gross margin less commercial expenses. We know both types of expenses, office and administrative expenses and selling, marketing and distribution expenses, both are included in the commercial expenses. So, office and administrative expenses, commercial expenses, office and varieties types of office and administrative expenses included in these expenses. Office and administrative, say for example, general manager salary, general office building rent, general other expenses, general office electricity expenses, all the general expenses included in the office and administrative expenses. Office and administrative expenses 10,000, selling and distribution expenses 5,000, 10 and 5, 15,000. Selling and distribution expenses, sales manager's commission, salesman salary, godown rent, delivery expenses, all the selling related or distribution related expenses included in the selling and distribution expenses. Say for example, 10,000 and 5,000, 15,000. 15,000 added with or less from gross margin 80,000 is called net income or net margin. So, we all are already understand how to prepare statement of cost of goods sold and how to prepare income statement. Next class we will discuss about most important topic in the management accounting, CBP analysis or cost volume profit relationship. In this class, today's lesson we are able to understand from today's lesson about inventory, all types of inventory in the manufacturing firm, and how to prepare a cost of goods sold statement and how to prepare income statement. This financial statement uses to external purposes, external reporting purposes, not uses in the internal decision making purposes. But management accounting provide information to managers, internally users to managers, and aid or help to manager to their various kinds of decision making. So, these types of financial statement not uses in the internal decision making purposes. These are uses only external reporting purposes. When a manager use information to their decision making or need information or required information for their various decision making purposes. Management accounting provide these information to various managers, say for example, production manager, sales manager, procurement manager, all the managers internally decision making, they want to have cost accountant or management accountant. Management accounting provides information to those managers or help or aid to managers internally decision making, provide information, make information or report information, but these types of income statement not uses in this purposes. So, management accountant prepare income statement under contribution format. Contribution format income statement more uses in the various decision making purposes. Today's lesson already finished. So, thanks to all my beloved student of BBA Professional 7th semester class 2020 and my viewer, my YouTube channel viewer, Mobile National College 1982 pages viewers, all viewers, thanks to all viewers and all my beloved students. Okay, thanks.